Welcome to etvFutures.com. It's Wednesday, February 27th. I'm Remy Hokie for your Commodities Recap. In energy, NYMEX crude oil futures hit a record intraday high, rising above $102 a barrel for the first time. Prices pulled back after this morning's U.S. inventory data. The EIA reported that crude oil inventories rose by 3.2 million barrels in the latest week. April crude ended today's session down by $1.24 at $99.64 a barrel on the NYMEX. Earlier, the front-month contract hit an intraday high of 102.08 a barrel. In petroleum products, heating oil futures fell 4.39 cents to end at $2.7711, while gas futures fell 7.28 cents to end at $2.4777. Meanwhile, nat gas futures fell 17 cents to close at $9.035 per million BTU. Over in the metals complex, COMEX gold futures gained on the day, hitting another record high at $967.70 an ounce. This came as the U.S. dollar weakened against the majors and fell to an all-time low against the euro. April gold gained 1.3% on the day, adding $12.10 an ounce, settling up at $9.61 an ounce. In other metals, March silver added 49 cents to close at $19.21 an ounce. March copper rose 6 cents to close at $3.84 a pound. This afternoon, we're joined by John Kilduff from MF Global. He'll weigh in on energy futures in today's session and also discuss the pullback in prices.
Well, we have, Remy, we have crude oil prices down below the $100 a barrel mark for the first time in several sessions. Today, the sentiment about the weakening economy as it translates into softening energy demand, crude demand, gasoline demand, has clearly won out over the concerns about the continuing decline in the value of the dollar versus the euro in particular. We had a pretty solidly bearish inventory report where we saw another big build in crude oil inventories and gasoline inventories. And while the distillates did decline significantly, we are at the end or near the end of the winter fuel season. So the support that normally would have produced is clearly out of the market for now. Also, we seem to have gotten some good news out of BP for a change, in that looks like they're in the process of fully returning to operation their Texas City refinery that's been really at a half-running capacity situation since Hurricane Katrina. That could be a big boost for the refined product market in terms of inventories and supplies, which has continued to weigh on prices. And certainly, and as far as the bears go, the durable goods number today was of such a magnitude of decline that you could only see that would be weighing on prices, as it certainly feeds further into the fears of the recession. So while other commodities were higher today, gold most notably, crude and energy is not a inflation pure play. Crude oil in particular has to serve two masters, one being the currency pressures, the inflation pressures, but also has to abide the economic conditions and the outlook for the economy, hence the sell-off we saw today. $100 remains the pivot point, and will now be some overhead resistance. And we're also finally seeing natural gas give it up. It touched on its 10-day moving average. We think if tomorrow's inventory report there comes in soft, we could see further declines there. So this could be the beginning of a sell-off across the board for energy.
That was John Kilduff from MF Global with his energy commentary. I'm Remy Hokie. Join us later for PM Exchange right here on etvFutures.com.